Welcome to the Real Estate Investing Club. This is the place everyday real estate investors gather to share their best stories, biggest insights, and favorite tactics to grow a portfolio of cash flowing properties in today's market. Here's your host, Gabe Peterson.
All right. Welcome back to another episode of the Real Estate Investing Club. Today we have Ali Nichols with us. Ali is the co-founder and co-CEO of Getaway, which is a fractional investing platform focused on short-term rentals. We love short-term rentals here. It's an asset that I don't have a lot of experience with, which is probably why I like to learn about it. But super excited to have you on here, Ali. Thank you very much for hopping on the show.
Thanks for having me. I'm pumped.
Absolutely. I told you before we got on here, we like to start with stories. We like to hear how people got to where they are today. So why don't you take us back to the beginning? How'd you get started in real estate?
Yeah, so my story in real estate really starts when I was a kid. I have been obsessed with this asset class for as long as I can remember. I have stories of like...
As a kid, you were obsessed with real estate. Wow. You're the only one. That's crazy.
Right. Stories of every weekend, every Sunday specifically, like going in the Oregonian newspaper and circling all of the open houses in the neighborhood and convincing my parents to take me to each one, where I would pitch them on why we should trade out of our house and move into this one because of the upside potential.
Wow. I can only hope my child will be like that.
So I always knew that this would be, something that would be like key to my career. But I actually kind of pivoted and entered into the tech space right out of school while I was doing some real estate things on the side. But always knew I wanted to marry that idea of how can we bring technology to the real estate industry. And so my whole career have been getting closer and closer to that moment, working at prop tech startups and now starting my own, which is, as you mentioned, a fractional real estate investing platform that is really geared to empower everybody to get into real estate investing. We're first focused on short-term rentals. So you could invest in a getaway property starting at $100. And then you, as an investor, have the economic upside of the rental income and the appreciation of that asset. Beyond just the financial investment, all of our getaway investors get access to using the entire portfolio of properties at discounts and perks. So an added lifestyle bonus on top of your financial investment.
Interesting. So it's not only an investment, it's also kind of like a timeshare.
Trying to build the new version of
right,
timeshare, where you actually own the underlying asset and it's the productive asset for you, versus just a right to use.
Huh. Okay. So I'm curious. I want to dive a little bit deeper into that. This is the first time I've heard this specific type of platform. Well, first of all, go back to you mentioned fractional real estate, or fractional platform, investment platforms. That's not something that everybody knows about. So can you just dive a little bit deeper into that term? What is it and how it kind of applies to the average investor?
Yeah, of course. So at Getaway, we source all opportunities in the market and in markets we're interested in. We buy the best deals we can find and have high conviction of their potential. And then we basically turn around and sell off fractional ownership shares to our investor pool. So you can buy, anywhere from $100 worth of ownership rights of a house all the way up to $100,000, depending on, where you are and your level of investment.
If I put $100 into the app or the platform, am I putting that money into a specific property, or am I just putting it into a pool and that pool is deployed, into 100 properties?
For us right now, it's a specific property. So if you have high conviction about, property in Miami or property in Palm Springs, you can actually be an owner of that specific property. But we plan on our roadmap is to also expand into doing, more of a fund type model with collections. Like, let's say you're really interested in beach type properties and want to go long on those types, we'll be offering that too as well.
Gotcha. And the timeshare aspect of this, does that correlate? I mean, did the number of days say that you can stay at the property correlate with the amount that you put into the property, or how does that generally work?
Yeah. So first and foremost, we view this as a real estate investment. And so we've shifted away from, in a traditional timeshare model, you get points to
Yeah, and
stay.
I'm sorry, I don't mean to put timeshare,
No, no,
that
it's okay.
phrase on top of your
It's
business
okay.
there, but it's the first
It's
thing that
all
pops
good.
into my head.
It's all good. So with our model, think about it as more like analogous to your airlines mile program. So the more you're invested on the platform, the bigger your perks are, discounts are, benefits. And then those show up as discounted stays when you book a property in the portfolio. They also look like being able to book much earlier than the general public or other investors, depending on what tier you are in terms of membership. And then we'll also be layering on other fun perks that make the experience and staying in the portfolio better than staying anywhere else.
Gotcha. Okay, so air miles, that's a better analog there than timeshare. Okay, great. Awesome. So when somebody invests into the platform, do they have equity in the properties, or is it how does that work? Is it just a right to the cash flow, a right to the appreciation?
Yeah. So the specifics on the structure, or as an investor, you're buying ownership shares of an entity that holds the rental property within it. So you're buying basically shares of an LLC,
Yep.
and that LLC owns the real estate.
Gotcha.
So, but it is true equity ownership of that company.
Nice. And right now, you guys are focused on short-term rentals, but you're thinking about, or your roadmap has other assets in it.
Yes. So we're focused first on short-term rentals, but over time, we'd love to expand to more hospitality properties.
Okay.
So really still focused on building out this travel benefit on the end user side, but really expanding outside of just STRs.
Very cool. I like it. Well, it's a really fun model. I hope you guys find a lot of success with that. How did you get into short-term rentals in the first place? Did you buy short-term rentals yourself, or why did you decide on that asset?
Yeah, so my background in the real estate space is I actually came from a previous startup that was focused on the long-term rental space, and we had built everything, basically a one-stop shop for institutional capital or larger funds or institutions to come in and basically deploy into long-term rentals. And what we found was it was just getting so competitive, and it continues to be really competitive in that space as more and more people have decided that there's institutions are like, okay, we want this to be the next asset class. But short-term rentals are still in their infancy stage. There's still so much opportunity. It's very, the majority are managed and owned by mom and pops. And so we thought, wow, how can we help, everyone, all consumers, be able to get access to the benefits of this asset class, which right now are just higher cash yields than a long-term rental if operated well, which we can go into. But
Yep.
so there's more opportunity in that sense. And then was really, really passionate about also this added benefit. Like because there's so many real estate investing opportunities and apps and platforms out there. So how can we differentiate ourselves? And what's a product? I always joke that all my friends would want to use. And so by having this added travel benefit, it really brings users in as being a twofold. It's an investment in the real estate, but also investment in lifestyle.
Yep. No, that makes sense to me. I mean, I love air miles. So if you're putting air miles in houses, it's an easy sell. So I want to shift a little bit away from the app, and let's talk a little bit more about just short-term rentals themselves, because in the groups that I'm in, people have been talking about Airbnb losing so many rentals month over month, and just the industry itself kind of seeing a contraction. What do you see in terms of the next year, 2 years, where short-term rentals are going to go, how the market's looking, just kind of the overall feel of the asset?
Yeah, I think first and foremost, it starts with the regulation. So you're seeing more and more municipalities take a stance and say, this is how we're going to this is how we're going to do things in our town, which have a major impact just on the available supply
Yeah.
on a platform like Airbnb.
It's interesting you say that because there's a town here in Washington called Leavenworth. It's a German
Oh,
themed town. It's well,
yeah.
yeah, you're from Portland, you know Leavenworth. And they blocked off all short-term rentals. You can't have a short-term rental in the city. And my girlfriend and I were looking to buy one just for a short-term rental because we love the city. But yeah, they completely blocked it off. So that's makes a lot of sense. But I jumped in. Keep going.
No, it's just, and that's exactly right. It's like you have to, the biggest thing for the industry and getting into this space right now is understanding kind of where is the municipality you're buying in, and where do they fall on the scale of, are they very friendly towards this because their entire economy is, driven by tourism, or the opposite end where in Leavenworth, probably people, there not very many housing opportunities. And so everybody coming in from Seattle, buying a house to put on an Airbnb takes it away from the local community members. So that's one thing we're like hyper focused on in our acquisition process of just like, where is this asset class really embraced, and how can we be good members of the community to continue to grow there, versus, towns and cities that are on the opposite end of that space. So I think that will continue to be an uphill battle in general for the space. And you're starting to see now more, like, especially in Miami, where I'm based right now, they are developing much more mixed use residential buildings where they're zoning, a quarter of a new condo building to be like short-term rental friendly, and then 3/4 to be, set up for long-term residents. So I think we'll start to see more and more things like that. But with that, the flip side of that is you'll also begin to start seeing more professional operators. We're starting to already see them pop up across the board, even from like the venture-backed tech space. But I do think you'll, just like hotels, you have Marriott and Hilton, you know what you're getting. We'll start to see players really do kind of own the entire
Branded experiences.
branded experience. And it will be different than the Vacasas of the world, because Vacasa, for example, comes in and they manage everybody's individual home.
Right.
We'll start to see companies where like, this is a Getaway branded property.
Yeah, this
when I
is
show up,
XYZ. You can feel it the moment you walked in the door. Yeah, that makes
the
sense.
beds are the same, the sheets are the same, the towels are the same, like the service level, it will all be more hotel like.
Yeah.
But in the communities that are pro.
Yeah. And I think that is, I mean, just from as a consumer myself, I've used short-term rentals in the past, and all my friends use them. And we've kind of gone away from short-term rentals just because the prices are essentially the same as going to a hotel, but you have to do your own laundry, you have to do like all the dishes. I have stayed at nicer short-term rentals, and they have better amenities, and they have people that maids that'll come in and do the linens and everything. And those ones, it makes sense to pay that price point because they're doing everything for you. But I do feel that the smaller guys are going to get squeezed out when they're making you do all this extra work to stay at their property. It's like, come on.
If the price point doesn't, like, it doesn't feel like you're getting a deal compared to staying in the hotel experience, that type of product won't exist in the next 5 years.
Yep. That makes a lot of sense. I just took a peek at the clock. We do have to move on. I do love this topic, so I appreciate you sharing with us. But it's time to jump into the quick question round. Are you ready?
Here we go.
Let's do it. Starts with books. I'm a big bookie, so give me 2 recommendations, one for general life wisdom and one for real estate specific.
Ooh, I'm embarrassed to say that I don't have a good real estate one.
It's all good. And it doesn't have to be a book. You can say like YouTube channels. You can say whatever, any source of media, I guess.
I'm just like constantly following the news, like all the time on these topics. So it's not like it's never coming from one source.
Okay.
But on the book for life, most interesting book I've read recently is Ray Dalio's book, Changing World Order. Have you read that one yet?
I have it. I read the recent one, the principles, but I haven't actually read Changing World Order. Multiple people have talked about it on here though, so it sounds like a good one.
It's really, really enlightening and also kind of frightening all at the
Yeah.
same time. So it's definitely one that I would invest in.
All right, cool. I love it. Ray Dalio has some good wisdom, so I'm something I'll have to pick up. All right, moves us on to the next question. This is for your younger self. So let's go back to the Ali who had, let's say she was just, with her mom and dad looking at those rentals and those houses in the newspaper. Go back to her, look her in the eye, give her one piece of advice moving forward.
Oh gosh, I wish I would have started actually investing earlier.
We all say that. That is a
I
universal.
know, I know. But I would be a really happy camper right now.
Yeah, invest early. All right. If anybody's out there, you guys are in high school, middle school, whatever, just start investing in properties. That's the way to go. All right. Next question. This is your Superman strength. We all have unique gifts that we uniquely give to this world. So, what is your Superwoman strength? What are you exceptional at?
I am really good. This sounds bad, but making things happen. Like all the feedback I ever get is like, oh, like she'll run through a wall to make it happen, or like
Getting shit done. No,
getting shit
that is
done and like
that is
figuring out if you tell me no, I'm gonna come back with like three like other ideas to like try and get around that no.
I
So
love it. That is especially useful here in real estate for sure, because shit always hits the fan. And that leads us to the next question. This one is mentors. None of us are islands. We all stand on the shoulders of giants. So, who is one person? Give them a shout out. Who's one person who has contributed the most to your career today?
this is gonna be kind of corny, but actually my fiance,
Right.
we used to work together, and he's also a co-founder of another company, and so he's been like so helpful in my experiences now starting my own. So
All right. Shout out to Ali's fiance. Thank you for helping her out. And the next question, this is, if I could find my spot. There it is. United States, it's a big place. A lot of opportunity out there, a lot of square miles to buy. So what is one metro that you are most excited about investing in today?
Ooh, personally or for short-term rentals?
I'll leave that up to you.
Okay. One area, and in true like real estate answer, you invest where you know, oftentimes. So one area we're actually really excited about is the a town outside of Chicago called Rockford, Illinois.
Okay.
Just from a really strong cash flow perspective right now in the long-term rental, like from a cash flow opportunity. So folks should check it out.
All right, Rockford, Illinois. You're actually the first person to say anywhere in Illinois. I feel like people are.
Well, that's because they have terrible property tax.
Oh, there you go. The property tax. It's the property. The rental laws too, right? It's pretty bad up there.
So outside of Chicago, they're better.
Oh, okay.
The Chicago metro is tough, which is like most people think of Illinois, all they think of is Chicago.
Yeah, no, that's me too. I get that. All right, and that leads us to the second to last question. This is about tools. Tools form the backbone of every business. So what is one tool that you use day in and day out?
Ooh, that's a great question. The one that we live off of is Notion, which is kind of like a knowledge center, can be project management tool across the board, and you can have everybody in it, super collaborative. So if you have a team and they're remote as well, Notion is a great one to get everybody on the same page.
Cool. I have actually not heard of that one yet. So right on. That leads us to the very last question. This is for the listeners. You've given us a lot of good advice. I'm sure people want to reach out and learn a little bit more about Getaway. So what is the best way for them to do that?
Yeah. Visit us at getaway.co, so .co. And then if anybody ever wants to reach out to me directly, it's super easy. It's Ali, ALI, at getaway.co.
Perfect. All right. Now I'll put that URL in the show notes, getaway.co. If y'all want to reach out to Ali, just click a little more in the description. It'll pull down the full description, and in there you can find Ali's URLs. Right on, Ali. That wraps it up. Thank you very much for hopping on the show.
Thank you so much for having me.
Absolutely. And for everybody who's here with us today, thank you guys for showing up. You are the reason we do this. So if you guys have any questions whatsoever, reach out to me, Gabe at therealestateinvestingclub.com. Other than that, I hope you guys have an absolutely fantastic week. Keep rocking real estate, and I look forward to seeing you on the next episode.
All right, before I officially sign off, I have a quick announcement to make. If you're interested in becoming a passive investor in one of my deals, my own company, Kaizen Properties, is looking for capital partners for our upcoming projects. We invest in what are known as recession-resistant assets, mainly self-storage facilities, mobile home and RV parks, and industrial properties. If you're interested in investing and would like to learn a little bit more about my company, our investing criteria, and some of the previous projects we've done, go to the Real Estate Investing Club podcast at therealestateinvestingclub.com and scroll all the way down to the bottom of the page. Click on the Invest With Us button. That'll pop up the investor form. Fill that out, and we will reach back out to you as soon as we can. Or if you prefer a little bit more of a personal touch, you can reach out to me at Gabe at therealestateinvestingclub.com. So really, that is it. Again, it was a pleasure hanging out with you guys during this episode, and I look forward to seeing you on the next episode.